Hello, and welcome to the Cryptocurrency News channel. So, we have data and news from Cointelegraph that says retail investors aren't even in on the game yet. So, the 40K, as we go to 40K, it's not a bubble, at least not yet. For it to be a bubble, there needs to be tons and tons and tons of retail people in. And retail can actually double, or triple the price very, very quickly. So I think like 80K, 100K is very, very reachable, like I've said in past videos. Even though Bitcoin's at all-time highs now, the market sentiment is extremely different from back in 2017, 2018. 2017, 2018, remember there were reports by mass media and other outlets that there were millions upon millions of Korean retail investors coming into the market. Google Trends also saw the same thing. I think Google Trends is starting to pick up a bit, but it's nothing like it was back in 2017. That's sort of why you're seeing Bitcoin rise and not altcoins rise. Because right now, USD dollar trading has picked up, but it's been largely from Wall Street. And you're not seeing a huge pump in alts yet. Although alts did pump pretty well yesterday, you're not seeing a massive, massive pump in altcoins because institutional investors, which are the ones that are leading the charge now, are not buying altcoins. Now, will retailers step in? Yes, they will, because people are greedy. Like right now, they're probably still holding back, like only 30,000, only 40,000. And I bet there's a good amount of investors that got burned in the bull run up before and lost a lot of their money. And then new investors looking to come in on the retail side are actually starting to take some lessons from what happened last time. But I do think greed will actually get the better of people, because greed always gets the better of people. Maybe when we pass 40K, maybe when we pass 50K. But it's really been institutions. But I do think that actually will help retail consumer confidence. I mean, PayPal accepting crypto, I think that's a big step. I think that'll get some American users in, because there's a lot of retail PayPal users out there, and some of them will be interested in crypto. You're seeing like not Grayscale, but you're also seeing Fidelity and BlackRock become interested. And I think with the passing of the Bitcoin ETF, which I think will actually pass this year because Jay Clayton is gone and the new administration hopefully is more friendly towards cryptocurrencies. I think with the passage of the ETF, you'll see more institutions, possibly retirement and pension funds, come in. And then when that happens, I think retail investors are going to be like, oh, okay, if these giant funds are actually coming in, then it's safe for us to come in. It's all about safety and security, why people aren't actually coming in. And even if Bitcoin dips afterwards, because once you rupture, once it becomes a bubble, it eventually will dip. There will be a much higher bottom for this dip, because institutional investors aren't going to panic sell like retail investors. So I think the bottom this time, it might not dump maybe like 80%. It probably will dump maybe 50, 60%, but it may not actually dump 80%. So we have to kind of like scale our predictions as if institutional investors are actually going to hold on to their investments even in dip. So it may not dip past 20, 30,000, if even that. Maybe we'll go to 100,000 and bottom out at 50,000. That's always a possibility, because these institutions are going to want to buy when prices are cheap, so they could actually counter some of the mass selling from retail. They won't be able to counter all of it, but they could actually counter some of it. At least with Bitcoin, you can see with Grayscale and XRP, like they're kind of just swing trading XRP, because like last week they were up 12 million on New Year's Day, but over the 7 days they were only up 3 million. That means they sold 9 million sometime in the last 7 days as well, up until New Year's Day. So we have to take that into consideration. Like the smaller coins, they might trade in and out of, but I think Bitcoin and maybe Ethereum, they'll actually buy for the long term. So when the dump actually comes after the bull run, I don't think it'll actually dump that hard. It will dump. It probably dump 50% or more still, but not to the 80, 90% we actually saw in the last time. You can keep track of Google Trends to see if retail investors are actually coming in. But right now, it's basically like organizations like Grayscale, PayPal, and others that are actually coming in really, really hard. And many of the critics who dismissed Bitcoin back then are jumping on board. So it's the big investors right now, and that makes me very, very confident that Bitcoin will shoot much, much higher, probably like 100K or above, because when retailers come in, there's going to be a big flush, and it's probably going to double or triple. And right now, if it triples, it's already pretty much at 100K. And last time retailers flushed in, we probably went like 5 or 6x. I don't know if it'll happen this time, because it just takes more money to do it this time. But I think 100K is very, very hopeful. And I do think like when the retailers flush in, once it gets to like 50, 60K, they're going to think Bitcoin's too expensive, and they're going to look for coins that have potential, that are not being sued by the SEC, but that actually have potential, and that actually have partnerships. And I think that's where a lot of our DeFis, a lot of our altcoins will actually come up. So that's kind of the report for today. Just saying that, like, according to data, it's US dollar trading that's actually driving it, not like Korean won or Japanese yen. And most of these US dollars are coming from Wall Street, which means retailers have not gotten in the game yet. And when they come in, we will double or triple again, most likely. So that is the news for today. Let me know what you think. Like and subscribe, and hit that bell notification button. Thank you, and have a nice day.